learned from the lesson. Live in the hills, but I still get a spread. Started with a little, but I still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it down, we gon' get it.
All right, ladies and gentlemen, I got your Watchlist coming in October 16th, 2020, and we are going to go over my $70,000 Draftkings trade, as well as talk about tomorrow, the 16th. It is an important expiration day. So, welcome to the middle of October. Welcome to earnings season. After this week, things are going to get really, really crazy in the market. So, how we position tomorrow is going to be very important. But we have a lot of things to go over today. Didn't really have too much, but it was a big gap down and a very, very big move all the way back to zero. It was exciting. It was slow. We also saw a big move with Draftkings, and now we're going to talk about that. I have a lot of plays I want to go over. I still made two separate plays. One I'm going to make a separate video on tomorrow. I did a big SPY put play, depending on how tomorrow plays out, and some other things. I have a political theory that I'm establishing a play on, or that I'm seeing is kind of insurance, but we'll talk about that. But we need to go over what we did with this Draftkings. So, got the plays, keys, everything else. So let us not delay. You guys know what you need to do. Drop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. It's the first link in the description, and it is pinned in the comments. We better see you there in the morning. It's free 99. It costs you nothing to join. YouTube.com/the-stock-market. You can post the plays, see the plays, watch the watch list come to life. And yes, we are playing a game tomorrow, or we're doing something. I have something ready for you. I don't know. Maybe it's ready. Maybe it's not. Maybe you have an idea. Maybe you post it in the comments. Maybe it's ready to go. I don't know. But you post it, and the most important thing you need to do, post your watches below. Let us know what you're looking at. Got any plays, comments, remixes, anything. Post them below and source that info. Shout out to Chad, baby. So, right off the bat, the first thing with today, again, we dropped lower. A lot of negative stimulus news, but all in all, you're going to get this back and forth. We talked about how you're still seeing the market react broadly, but then you're getting the earnings run-ups. We saw the same thing today with specific companies, but overall, we gapped down and then ripped up, but it had to do with stimulus for the most part. That's what I'm attributing it to, and even what I'm talking about, we're going to go over this with that political play and that theory and that play I made today, but it looks like they're trying to have a soft landing on stimulus. Again, we heard about the TikTok news, how it's kind of going back and forth. They're doing something similar because now they're saying they'll do more. Than another talk of Mnuchin and Pelosi, and then Kudlow saying stuff, and then McConnell saying he won't do a bill. There's a lot of politics around it, but kind of the more and more the headlines come out, it softens the blow until something really happens. But I don't think it's going to work. So we're entering an interesting part with earnings and just overall seasonality with the market. So we will have to see where we go from here. But that will take some time to come into fruition. So as far as tomorrow, I'm thinking it's going to be a battle of the ranges. So this is just my opinion on kind of what I'm going to be looking for. It could even set up some credit spreads or anything like that. But I think it's going to be a battle in the sense that unless there's any surprise news, I think some companies will move individually based on news if it does come out. I also think you're still going to see rotations. But if we open up big and the range is big, kind of how we gapped down today and it was a wider range, and you start to see bigger moves, then I think we're going to have a pretty big moving day. But if we open up small and that range stays small, it's going to be a pretty slow day, I'm assuming. So it is definitely wait and see for tomorrow. However, we know the main points we need to watch. The real question is right around the corner with earnings, or if there is any groundbreaking news. But that being said, now watch for rotation laggers. Now with earnings being next week, a lot of these big companies, things are going to start moving now. So get ready. Don't get caught off guard. Even this last few weeks could have gotten people off guard. The question is now, when do the premiums and the options and the momentum start to kick back in again? You've been seeing that get turned on and off. So watch out for that. But watch for rotation laggers. So an example of that, Netflix has been going up, kind of even like Snapchat, and while other companies that don't have their earnings next week, they haven't been going up. So if you start to see some of those companies that report next week stop getting juice, watch for money to flow into some of the other bigger names or other big earnings that have their earnings a little bit later. That's that rotation lagger I'm talking about. So that is what I'll be keeping an eye out for tomorrow. Really, I'm sure we will get an idea by the morning of how things are going to move, and then we'll just go from there. But that is pretty much it. So let us get into the plays. So right off the bat, we have to talk about this Draftkings play. So I did make two other plays today. I will start with those briefly so we could go over it and talk about it. But we are going to go over this lesson because this is a big play. I did two different plays. We did average down, but the total cost of this play is about $70,000 of risk, $40,000 in shares, $18,000 or $20,000 in risk on the options trade, which is a net loss risk. So did a few things on that play, but as far as the other plays for today, I got hustled on these Boeings. This one would have been a great one to sell premium on, and I really thought again, today was a very, very big range. We opened up lower. Boeing was outpacing the market. I was like, okay, that trend did not look good for them, so I grabbed these next week's, 5 of them at 41 cents. They're down over 50%, but this is one that would have been a great premium sell even for next week to do 50%. This is one, instead of selling into the momentum, I bought into the momentum, and you see how that backfired. So that was the first play that we made today. The second play, I grabbed it on the TD. I grabbed 50 of the January 193 puts on the SPY for 47 cents. So these are a little bit more expensive, and quite frankly, this isn't a lot of time. This is a 2-month, 3-month contract, so you're paying a premium in 193 is it's very, very far out of the money if we're at 347. So there's some premium embedded in there. I'm using this as an extrinsic value play. Some people could say it is insurance, but I'm just looking for something. This is a play. If something happens, I could justify a shorter term. And as we get into kind of the end of the year with everything going on, I'm just feeling a little spooked out. But mainly, this has to do with politics. So we'll make a video on it, but I explained it. This has to do with kind of a black swan theory if there is any sort of downgrade. Ironically, last time you saw a really big downgrade effect was October 15th, 2013, and then the 2 years before that in 2011. So I will make a video. We'll talk about this, but that's why I got that play. It was about like $2,000, I think, for all those contracts. So those were the only 2 plays I made today. Now, the real question is, what did we do with Draftkings? So let me take you guys back here so you could see it. But this is the play in writing and what we need to do. So if you guys saw Draftkings, we've been getting clapped on it. So we did the play. When we initially made this play around last week, we got about $2,200 in credit, a little less. We averaged down. Now we're at a net loss. So let me show you this play. Here is the play. Why are we down on it? What's going on? And how are we going to hopefully get out of it? And why did I do what I did? So we shorted the $52 puts and bought the 40. So the stock already dropped like 7% that day. It was the day that they announced the offering. I pretty much said, let me sell puts pretty much at the price they sold it at or below. Then a series of bad news came in, all of this stuff with Titans, the NFL, people talking about a secondary another offering after the first offering, which is just absolutely insane. There is an amended 90-day lockup period, I'm pretty sure, on the stock after that latest one. But what happened and why it makes sense why we're down so much, why we had an opportunity to win also, I sold far out of the money puts relatively for the most part. The stock was at 60. We said we'll go $52 by next week. You know, that's over like a 20% or around 20% move by the next week. So why did we lose? We shorted the $52 puts and bought the $40 puts as insurance. So this is what's happening. Now the stock is trading at like $47. These puts are in the money, so we shorted them. So we owe the difference as they go down, and we bought these as insurance, but they're only worth 8 cents because they're out of the money, but these are in the money. So that is the dilemma with it. This is how we're losing money, but now this is the key we need to understand here for the rollover and how we're going to get out of it. So I'm down on it now. You can see we collected $2,000 in credit. We are down $10,000 net total, but that leaves us with a market value of $12,000 or negative $12,000. So this confuses people sometimes. This is just like a math equation. You literally take your credit, how much you received, and then what you're up or down on, and pretty much that's telling you what the market value is, equals market value. In this case, we got $2,000 of credit. We're down $10,000. That means the whole position is worth that $12,636. That's what you see here. So that's the market value, but realistically, we're down $10,000. $2,000 of it was potential profit. So now what we're going to do with this play is that it expires tomorrow. So I could still win. It's just going to be very, very difficult. And how we would win on this if Draftkings does bounce up tomorrow, since this contract's in the money, dollar for dollar, whatever amount it bounces closer to 52, we'll make that money back. And even then, if it closes at 50.76 tomorrow, so if it shoots up $5 from here today, they were up at like $48 this morning. It's really like a game 7, but we're kind of far from where we need to be. So depending on what happens tomorrow, pretty much the value of this contract, that will determine if we make or lose more money. Now, given this play is still open and there's still some downside, I could lose an additional $8,000 coming in tomorrow. This is an $18,000 or $20,000 total risk trade. However, now this is what we did now to take advantage of this. Pretty much if we're still down on this play, the idea now is to roll it over. And what we do with the rollover is we try to make up the loss and preferably still walk away with a profit. The idea is if these contracts expire tomorrow, wherever it's at in the money, you're either going to get assigned or you're going to have to buy it back and take the loss. These contracts have no money. That's it. The contracts are expiring. I mean, you can't do anything else. So the idea with rolling over is you close this position, but you still play the same side of the trade. So in this case, I would just go and roll over to the next week and re-short the same exact contract. In this case, it's those 52s, but now for October 23rd, and then we would go buy back the other insurance play to make it the credit spread. So I actually did buy right there. But if you see right here, we do 18 contracts, you'll see I will get $13,410 just from shorting those contracts again. However, if you short these contracts, you're just going to take a lot of buying power. That's why you have to do a credit spread, and you have to buy that $40 contract. So when you roll it over, you essentially close out of the trade and reopen the exact same trade or a similar trade to be able to hopefully, if it does end up doing what you're doing, but you just needed an extra week, an extra month, you'll be able to walk away from it. So in this case now, what we're trying to do is recoup this loss. So this is what we mean by this now. You roll over to make up for the loss so you don't have to take a loss and preferably still walk away with a profit. But usually after you roll it over one time, so I could do this for 1 week, but if I try to do it again, the profit is going to diminish. And now this is what we talked about a lot today. It makes sense to roll over if and only if you could walk away with credit or, some level of profit potential, or you could have break even potential. Otherwise, you got to pack your bags, take the loss. At that point, you're just, chasing it week after week, or you're going to have to really strategically time it. So what does this mean? Make up the loss or roll over if you could walk away with credit. Again, here's the original play. This is the same ratio you guys need to pay attention to. The market value, how much credit, what's your net loss, and then what you could roll it over to. So in this case now, the two options are either make up $10,000 to break even, or if I could get more than $12,600, not only can I have another chance to get all the money I lost back, but I could also still be in the game to receive profit. So when it's all said and done, I will actually just be back where I started plus a profit. That is obviously the most ideal situation. So you see here, back to here, if I went and shorted those same contracts next week, if I sold them at the bid, I would get $13,140. You're like, wow, that sounds great. It's higher than here. But the problem is, only way you could do that is if you had a lot of money and were willing to put that up. In this case, that would be like $90,000 of capital. So by buying the contract, buying the 40, it allows us to short this many contracts without having the money up front, because you just have to cover the distance between the contracts. So now in this case, this is what I did to roll over today. Instead of closing out the play, we still have till tomorrow. So the fact that it was down so much, and I kind of did the math in my head. I'll show you here. I bought 20 of the next week 40 puts, the ones I would need to average down. I bought them today because I could still lose on the other credit spread. It's at 45 now. The back end is 40. So by buying these with time now, I'm kind of preparing ahead. My only risk is if the stock goes up and I end up winning on the play, I will lose on these puts. But I spent $12.60. So now I know this might get a little confusing. Let's go back to the rollover play. $13,140. We paid $12.60. I just did the math for you guys because I'm not good at math. That leaves you with $11,880. So keep this in mind in what we said. The fact that I had to buy these plays now at any time, depending on what Draftkings does, if I win or lose on this play now, all I have to do is re-short these and I'm back in the position. And then if next week Draftkings ends up bouncing, I will be able to make money on this. But now the net value is $13,880. Right now it's $12,636. My total return is $10,100. So if I did execute this trade and close this out right now and then re-short it for next week, I would have the same exact position and I would have received more in credit than I lost. So realistically, since we lost $10,398, we would just subtract that from the new amount that we have total wise in credit. So 10,398, the original net loss on the play, if I closed it down, it leaves me with 1482. So the new rollover play essentially would have would have our credit here saying 1482 instead of 2,000. And then if DraftKings closes up above 52 by next week, we make all of the money back. But you can see this is a very slippery slope because who knows what could happen next week. If it doesn't go in there, you'll get clapped. But also now your credit is diminishing. Now I'm going for almost half of the credit, and this is what we're saying. You roll over to make up that loss. I don't want to lose $10,000 and close the trade and just take the loss. It'd be nice to walk away with the profit when it's all said and done, but every time you roll it over, that credit is going to diminish, and you never know what will happen. So at one point, you may need to just pack your bag. That's why someone said, why are you chasing it, Josh? It seems like you're chasing it, but realistically, you can see in this scenario, it is more rational for me to roll it over and give myself another week if I could do so, and it's just costing me less credit as opposed to just taking a loss. So the fact is, I could still walk away with the profit. It's just going to tie up capital, give me stress and timing. So that is the whole idea of the rollover, but that's the first part of the play. This is where it gets a little nutty. I talked about this today. I just like DraftKings. I like where it's at. I saw my opportunity, so I didn't want to cheat. I wanted you guys to get this learning lesson, see how we could finesse out of this play, and you guys will see what happens with this DraftKings. That's why we're documenting this all. But we bought this in the long term. I really, really like this stock, and I said, hey, I'm going to use this opportunity to sell puts. So I sold the same naked puts, but for November, got a little more time. I sold the 55s, and I got $1,200 per contract, but I sold 1,300 of them. So this has a $40,000 buying power effect. I pretty much agreed to buy 1,300 shares of DraftKings at $55 by the end of November. But since I got $1,200 per share, I'm pretty much agreeing to buy the shares, or my break even on the shares would be 1,300 shares at $43, which is slightly higher than when we paid for it. I like it at that price. We were excited then. I think that's a decent value. The follow-on offering just sold and easily sold that much more at 50% higher, so I'll take it. But this is a naked play. So you guys saw on the Robinhood account, why do we buy the insurance? You have to buy those 40 puts because if you don't have this much money to tie up and agree to buy it, that's where you have to buy the spreads. And that's why credit spreads, you could sell puts and still lose. But now with this play, this one's a lot more unique because I'm just selling a cash secured put. I want to hold the stock. I showed you this example with Snapchat before, actually on the other account. If we come to our small long-term account here on the YouTube, or the big one actually, we have a lot of Snapchat shares, but I did one of these purchases here at $13.50. I sold a put and I got exercised, and the stock kept dropping and I got assigned on it. We did the same exact thing I did on the DraftKings. I was forced to buy the shares at the price I wanted, but we're up on those shares over 100% now. So if you have the capital to do it, that's why I'm saying this is a separate type of play, given that DraftKings just kept going down. It was killing us on the credit spread. I saw another opportunity here I wanted to take advantage of, and I just like the stock. But the idea is here now, I'm agreeing to buy 1,300 shares of DraftKings. I got paid about $16,000 to do it. About $15,600 was the credit. So that's what's happening here by November. Let's say DraftKings shoots up and doesn't go and goes past $55. I would get $15,000 and just walk away with that profit. And again, we still have the other play up there too. But even if the stock dropped, even if it dropped below 40, I would have to hold it and take the loss. But the idea is our cost basis on the shares will be 43. I still keep this 15,000 no matter what. So even after I exercise the shares, this 15,000 is mine, and I'm going to keep it that way. We're not really looking to trade this as much as I am just, hey, if it expires, I keep the money. If not, I'm just going to buy the shares. So that is a cash secured put. But as you see, 40,000 there, 20,000 on the other one. We have an interesting setup here with DraftKings, and those are all the plays. So that is pretty much it for that. As far as tomorrow, watch all of the chip makers. We also have the Qualcomm spread. If you guys remember that one that we did the other day, we did it as the example. Even yesterday, we're slightly up on the Disney one. Oh, wow, we have about 52% on. Actually, I have a decent amount on the Disney one. I didn't realize that one. That expires next week, so we might want to close that one out tomorrow. This Qualcomm one's probably going to expire up 92%. You got 460 credit. So those are two big plays there. And this will add to our credit spreads here, but also what you guys have seen here, one DraftKings realized loss can wipe out all of the other one. That's one of the big parts we wanted to show there with credit spreads. But going to be watching out for those companies, any sympathies, even with Disney and Qualcomm, but AMD is one of those. Watch Apple day after the event and all that. And then I like all of these companies here. Snapchat towards IPO, I think is going to be very interesting. Twitter at this level, they're even getting some drama. I think this is a very, very crucial level for them. If they're not able to break out, it's not like Snapchat. I think they could take a really, really dark turn there. So I'm going to be watching them. Facebook kept moving, and then these are some of those companies, like I'm saying, related to Netflix. Facebook and Amazon, they've been going a lot more red, while other companies like Netflix barely went red today, but it was actually green for the most part. So watch for that lag rotation. Then Boeing, I think, is going to have a big effect. We'll see how the dollar and everything else moves, but I don't think it will be big tomorrow, or at least till next week. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining, and especially the helmet go a little bit crazy, baby. But the question is, are you lobbying and are you making an attractive effort to get what you want, baby? The code loves you. I love you. I'm going to see you in the morning. Let's go.